The other one on our radar is Vedanta. Now, Vedanta's creditors will meet today to give their final verdict on the plan to split the Indian Mining Conglomerate into at least 5 different businesses. Now, Puneet is joining us to give us more details on how this could potentially pan out. Puneet, good morning.
Hi Agam, good morning. So definitely it's a big day for all Vedanta shareholders, as you rightly said. Creditors to meet today to vote for the demerger plan going forward. Now both the secured as well as the unsecured creditors and lenders will vote on it. So the plan will need a majority of about 3/4 of the approval to go through as well. The demerger, which is of course was approved back in September of 2023, plans to demerge the big entity of Vedanta into 5 other listed entities, including the one that is already listed, which is Vedanta Limited. Now, for every 1 share that you hold currently in Vedanta, you will get a subsequent another 1 share in each of the other new listed entities as well. So eventually you will have holdings across the 5 entities once all the entities are listed. Apart from that, they've already received the no objection certificate from the BSE as well as the NSE. And earlier the plan was to demerge into 6 separate entities, but now that has been changed to 5 new listed entities. So effectively there will be 5 listed entities, including the one that's already listed. Now we look at 3 key aspects of this particular demerger plan. The first one's, of course, which will be the resultant entities involved. So Vedanta Limited will continue to house the Hindustan Zinc business, as well as the copper business of the company, and the aluminum business, which is the second listed entity, will have Balco Smelters, which is one of the key businesses in terms of the aluminum business for the company. The third one's, of course, the Kane oil and gas business will move into the oil and gas entity as well. And the fourth one will be the iron ore mines, which goes into that subsequent business. And finally, the power business. So these are the 5 entities essentially that will get listed. It's essentially that the top 2 listed entities by market value will effectively be Vedanta Aluminum, where we'll have the Balco plant as mentioned, and the second one will be Vedanta Limited, which is the current listed entity as well, while the others will follow through suit according to MK Research. Now finally, what could be some of the potential benefits for investors currently? So investors will of course get exposure to 5 pure play companies going forward, and this could actually trigger a re-rating in some of the businesses such as aluminum, which is a very high margin business as well. Apart from that, they can currently be playing this via the holding entity right now, and they will also get a large an exposure to 3 demergers business at absolutely no cost. So it's effectively a very big update in terms of Vedanta shareholders. Watch out for this update, and because 75% majority is something to watch out for. It'll be key to going forward as well.
Absolutely, Vedanta is going to be key to watch out for as well, because clearly if you see Agam, in terms of the stock price performance as well, I mean on a YTD basis itself, 6 to 7% is the kind of cuts that we've seen on the counter. Though 50-55% is the kind of returns it's given in the last 1 year. So there has been some bit of positive momentum, but it's not consistent, and that sustenance is something that the street is actually watching out for.
Yeah, absolutely. But while we are keeping an eye on Vedanta, we also have Rucha, who's joining us to give us an idea on the top brokerages that make for the recent market correction. Rucha, good morning.
Good morning. So definitely, there's Morgan Stanley who's come up with a note on India equity strategy as a whole. Well, the brokerage house says that Indian equities continue to overlook good news. The broad markets are drawing down rapidly as the bid has faded despite the improving fundamentals. Though catching the bottom is difficult is what the brokerage house mentions. Buying Indian equities could prove to be rewarding. So this is a big positive by Morgan Stanley. Well, they also say that the stock in terms of valuations are actually cheaper than they have been since the COVID bottom, and India should resume its outperformance to the emerging markets in the upcoming months, only if the global cues, of course, don't surprise negatively. However, they also mentioned that global news have turned better, including the situations like oil, war, etc., and therefore they are very much bullish on Indian equities. There's Citi also, which has come out with Indian equity, wherein they mentioned that Indian equities have corrected meaningfully year to date since their peaking levels. Now, post this correction, the valuations for large caps are reasonable. Remember, this comes around a situation wherein most of the people are concerned about valuations, and both of these brokerage houses mentioned that valuations are not bothersome and are cheaper. Therefore, the key stocks which Citi have rated as buy and prefer in this market is HDFC, Kotak, Maruti, Endurance, HDFC Life, Torrent Pharma and Make My Trip. In terms of sectors, the key overweight sectors include banks, telecom, healthcare. However, key underweight sectors include IT, metals, consumer discretionary. Lastly, their December 2025 Nifty target is of 26,000 and therefore has around 13% upside from here on.